Hi, good morning. I'm Nicholas Morgan, a client portfolio manager here at npower's optimisation desk. Welcome to today's market update on Monday, the 5th of December. So to start with this morning, we've seen very little taking place in the market for both power and gas. We do expect prices to come under a little bit of pressure today as demand is expected to outturn significantly higher than seasonal normal levels. This is coupled with cooler temperatures expected for today and also strength in the oil markets. So that's the key headline for this morning. If you'd like to continue listening, please do. Otherwise, we've got some contact details below if you'd like to contact us there. So moving on to today's main market update, the UK gas system is expected to close 5 MCM short. This is following flows from Belgium being reduced and also demand expecting to outturn above seasonal normal levels. Demand is expected to outturn around 57 MCM above seasonal normal levels. This is significantly higher for this time of year, but is mainly due to cooler weather temperatures by around 1.5 degrees, which you'd normally expect around this time of year. We've seen healthy flows from Norway and the continent helping to support the UK gas system with reasonable withdrawals from the LNG sites as well. We have heard from Centrica last week regarding the Rough storage facility, and they're expecting to start withdrawing at the end of this week on Friday the 9th of December. Moving on to oil, the oil prices have found significant support last week following the OPEC production freeze cut talks. The next stage for these sort of talks is to start looking at non-OPEC members, and there had been some concerns raised this morning around Russia's involvement within those cuts, considering they are now producing around 11.21 million barrels a day, a 30-year high for the exporter. So this has created significant uncertainty within the market around what a cut would look like for Russia. Elsewhere, the European Commission have had a busy morning this morning following the Italian Prime Minister's resignation, which was handed in yesterday, following a no vote to change any sort of governmental reforms within the country. This has created another level of uncertainty within the Eurozone, considering the Italian banking sector has around 360 billion poor performing loans and around 200 billion worth of equity. So a lot of uncertainty around what the future looks like for the Italian banking sector, with the European Commission expected to support the banking sector as they enter a period of need of capital to continue operating. Many within the political environment in Italy expect the oppositions to start challenging for the Prime Minister's position now, with far-right groups suggesting that if they were to be elected they would leave the European Union. So again, with the Brexit vote that we had recently and now this, the Eurozone is going through a particularly tough period within their history. So more to follow on this during the week. That concludes my market update for this morning. If you've got any questions, do get in touch. Otherwise, we'll see you at the same time tomorrow. Thanks.